Good day, and welcome to the SNN.Network Summer Virtual Event. Our next presenting company is Killi Ltd. It is now our pleasure to turn the floor over to Neil Sweeney, CEO and founder of Killi Ltd. Sir, the floor is yours.
Thanks so much. Hello, everybody. Thanks for taking 30 minutes out of your day to have a quick chat specifically about what we're doing here at Killi. And we've got about 15 slides, but feel free to write in any questions that you might have in the Q&A tab, and I'll toggle back and forth and try to obviously answer them wherever we can. Just for context, Killi is a company listed on the OTCQB under the symbol MYIDF. It's also listed in Vancouver under the symbol MYID. We've changing the slides here. Just to give you some context sort of specifically about who Killi is and what we're doing, the philosophy of Killi is actually quite simple. What we believe that the gap in the market is today for really any single consumer today on the planet over the age of 16 is that there is no access to their data. I think we would all acknowledge that we all have a data footprint or a data profile. That data profile is currently being collected, amalgamated, and sold for approximately $6,000 per year. But you as a consumer have no optionality to either vend into a compensation model, nor do you have an opportunity to actually opt out should you choose to. Killi's real mission is to provide that access to each individual consumer, and as a byproduct of that, provide them with the optionality to then be actually compensated for it. We're headquartered in the United States with offices in New York as well as in Toronto. What our really core platform is providing consumers access to their data, and then as a byproduct of that, allowing them to sell it to Fortune 500 brands and platforms and be compensated. The revenue model for us is quite simple, specifically in that every time we actually sell data, we actually work on a 50-50 rev share with the individual consumer, where should a dollar be purchased of your data, 50 cents would go to you, 50 cents would come to us. Just a few little housekeeping items sort of specifically around the capital structure. There's about 67 million shares outstanding. Overall, this is very clean. We have no debt. We have over $3 million in cash, 45 to 50% ownership, of which I'm the single largest shareholder by a long shot. So I always tell everybody, if you're investing in this company, you're investing alongside me. So I stand to lose and or win the most. Options are obviously primarily for employees, and warrants is a very small tranche of warrants outstanding with an average strike price of $1.05. So considering we're trading around 20 to 25 cents, there's a lot of upside here before those warrants actually individually kick in. So today, from a market capitalization point of view, we're operating around a $15 to $20 million market cap. A couple of things I wanted to just sort of speak through specifically is just to give everybody some context as to how we're able to take advantage of the market. But as I've got outlined here, in this particular slide, and you can find any of this information on our specific IR site, is that really over the past 20 to 30 years, the data industry, which is a $250 billion industry in the United States and a $400 billion industry in the United States, has really been built on the amalgamation and collection of consumer data unbeknownst to them. The value of this data has continued to increase as increasingly more and more companies use data to power their businesses. And that's been very beneficial to companies who generate an average revenue per user, such as Facebook, Google, and others. That, once amalgamated, works out to about $6,000 per year. But yet what we feel that the disparity is that you're the individual that's providing that data. Not only are you not actually getting compensated, you're actually not having really any optionality. There's two core tailwinds that I think are catalysts for Killi that you should pay attention to. The first one specifically is around the notion of regulation. So about 2 years ago in Europe, the EU introduced a new privacy policy which forced companies that were using data to have explicit consent from individual consumers. This might sound trivial. It's not, primarily because the entire data market has been built specifically on amalgamating data without consent. The end result of this has been pretty much every country in the world has been revisited its privacy policies to change them to put the consumer at the forefront of this. What this means is that this $400 billion data market, which operates primarily without consent, needs to vend back into the market to find a new supplier that can provide them with consent. So Killi, which has hundreds of millions of individual accounts, I'll get back to that, stands to benefit from this migration. The second trend that I think is very important for everybody to understand is sort of what's happening specifically in the technology space. After the changes to the privacy regulation in the EU, some of the biggest technology firms have picked up that baton and used it as a way to drive more revenue into their businesses or differentiate their businesses. The two examples that I often point to here are Apple and Google. So Apple, as all of you know, is increasingly leaning into privacy as a differentiator for their product. The simplistic thing that's happening with Apple is that they are reducing the amount of data that is leaking out of various different Apple devices. So a company that had a dependency on data out of Apple 6 months ago, due to recent changes, is now no longer able to actually get this data. Now, you might think, again, that this is a small thing, but what we've seen over the last couple of weeks is companies such as Poshmark, Zynga, Facebook, have actually gone out into the public market, had to revise their forecast downwards, primarily due to the actual changes in privacy for Apple. In short, they're not getting access to data that they used to be able to get access to. It's hurting their bottom line, which is forcing companies like this and others to actually find new suppliers in the market, which is us. The bigger grenade in the market, though, is Google. Google provides the infrastructure and the oxygen for the open web, or for all publishers. There's approximately 2 billion publishers operating today. 2 billion publishers actually use the cookie to run their revenue model. That's how they target you with advertising. Google has made a decision to remove the cookie, which is, in short, removing the oxygen for the open web, which is forcing all of those 2 billion publishers to find a new supplier in the market. The end result is you have two choices as a publisher. You can vend into the market and find a new supplier like Killi to provide you with this data. Killi has no exposure to cookies in its ecosystem, or you can shut down. So we think that these two tailwinds, combined with the government regulation, which is inflecting around the world, are incredibly important. The other thing that I think is really important to kind of talk to on this slide is this sort of this Venn diagram on the right-hand side. I say this all the time because in order for you to sell data, and I've been in this market for over 20 years, is that if you want to sell data, you have to have scale. But you cannot sell data if you have 10,000 accounts or 100,000 accounts or 1 million accounts, because you're actually replacing data that somebody's already purchasing. Procter & Gamble, if they're buying 100 million profiles of data, they need to find a supplier that can provide them with 100 million profiles of data. Scale is essential. We have that scale. Over the past year, and I'll show this on slide 7, we've moved from 10,000 accounts to hundreds of millions of accounts, thereby being able to check that box to provide that scale. Additionally, distribution is key. Distribution is just like every other business, is that in the data world, there are distribution engines, which I often classify as the grocery stores of data. This is where the Fortune 500 companies actually purchase their data. Without distribution, you are limiting your ability to drive revenue. For us, what's really important is that we've been able to actually drive distribution into 15 of the largest global platforms in the world. You combine the scale plus the distribution with the uniqueness of our data. Our data is unique because it has one-by-one consent tied directly to the consumer, which solves those issues regarding privacy, and it also has no exposure to the cookie, sets a very good foundation from which we can actually drive individual revenue. The one thing I wanted to talk, just a couple little more things here, sort of specifically on these three sort of tenets. You can read more here, but the other thing that we think is very important is that this notion that data carries liability going forward if you do not have explicit consent. What we found is that increasingly companies, specifically those in the Fortune 500, actually want to actually offset liability. So they're not willing to actually continue to actually work with the same players that they've worked with in the past. And that's actually forcing them to actually move, to new partners. Just quickly going through this slide, I mentioned this before, but your data profile is worth $6,000 per year, and every single person on the planet has one. We think that that's the opportunity. Killi's real destiny is to try to provide that foundation or that front door for consumers to access that data. We're trying to actually tie as much data as possible that we can underneath your profile. The data that we bring in is from a variety of sources. We provide data that has been breached or leaked to give you notification that, for instance, you might have been part of the T-Mobile breach or part of the Facebook breach. You can go into Killi, validate your identity, and actually query to see if you're part of that breach and actually pull that data back in underneath your profile. We've brought data in from brokers to actually give you visibility on what's trading in the market. And we've also done deals with publishers where those publishers are looking to add additional data variables or fidelity to the data that they have. Important to note is that the cost per acquisition for us is actually virtually zero for actually driving all this scale. So for context, we have scale. We have 320 plus million accounts. We're operating in a $400 billion market that is transitioning due to changes in compliance. And we have global distribution in 15 biggest platforms with virtually no overhang from a cost per acquisition. We think that those are really strong tenets for growing the bottom line. From a distribution point of view, the majority of data, as I mentioned before, is actually purchased in these platforms. So an example of these platforms would be a company like Oracle or a company like LiveRamp. By having your data inside of each of these platforms, you give yourself an opportunity to actually drive increasingly more revenue. We feel we have a competitive advantage primarily because it's not trivial to be integrated into one of these platforms. We've done it 15 times. I think for us, what we believe is that the combination of demonstrating to Fortune 500 brands who've actually chosen our data over their incumbent is a proof of validation, and actually going through this validation process with the 15 of the biggest data platforms in the world is actually also validation for what we're doing and sets the foundation for strong growth going forward. We do look to add approximately 1 to 2 net new platforms while growing revenue in the pre-existing platforms every quarter. Lastly, just quickly on the uniqueness, the difference for us, it's very hard to differentiate data. Our uniqueness is that we actually have the direct consent from the consumer. You'll be hard-pressed to find anybody that has the level of scale with the level of consent that we have in the market. We believe that the Killi data is the most compliant data operating in that global data market today. The catalyst right now is companies are either looking to offset liability and compliance issues, or they're looking to actually offset risk associated to the cookie or the loss of the mobile ID. We can solve both of those things, and we think that each of them is a massive business unto itself. And I did talk already specifically about the liability issue. Just quickly to visualize what this looks like. This gives you a sense of, we've gone from 10,000 accounts in Q1 of 2020. We're now over 320 million accounts. We've gone from, 2 platforms to now north of 11. It's actually closer to 15. And we think that the top line number here of the number of accounts we have and the number of distribution partners we have is actually going to increasingly grow. Just quickly on kind of the revenue verticals. So as I mentioned before, the question is, how do you make money, Neil? We make money increasingly when data is purchased. So the more data we sell, the more money we make. The more money we make, the more money we redistribute back to consumers. And so intuitively, the bigger the denominator we actually have as it relates to data, the bigger the denominator we have as it relates to data gives us a bigger opportunity for us to actually monetize that data. That denominator of data combined with the distribution, we think are catalysts. Now, who we sell to are 3 verticals, primarily brands and agencies. So think Microsoft, Hasbro, BP, HP printers. These are companies that we sell to today. These are companies that are buying data today to specifically inform the media that they're purchasing. So we've had a lot of success in adding these Fortune 500 brands in the U.S. market over the past year, and we're continuing to add more every quarter. Additionally, we sell specifically to platforms. I spent lots of time on this, but examples of platforms would be Oracle, LiveRamp, Lotame, T-Mobile. These are companies where your data is sitting inside of their platforms, available for their clients to actually purchase. Bit of a longer sales cycle, but creates a foundation for long-term organic recurring revenue. And then the last vertical would be data sales. And this is companies such as Nielsen who are actually purchasing data directly from us to inform a television research panel that they might have. These are longer term contracts. The average length is minimum 12 months, auto renewals as well. So they're very technical. They require a lot of integration. And what we've done over the past year is we've really kind of built these out. So we're poised to actually take advantage of all the scale and distribution that we've had. So it gives you a context here of sort of some of the names. It's a bit of a logo salad as to, some of the companies that we're working with. But I think that the takeaway here primarily is that these are all companies who've actually gone through the rigor and validation of our data, and they've chosen to work with us. Similarly, as it relates to the brands and agencies, this is, again, some of the brands that we're working with. We sold to 46 brands in Q1. That's up 39% quarter over quarter. Our next quarterly announcement is out in a couple of weeks, and I think you'll be pleasantly surprised with the direction that that's going in as well. I'd just like to say, maybe before I kind of turn to some of the questions, some of the reasons to invest. Naturally, I believe, I'm biased, but we believe that the trend towards consumer control of data and the trend of privacy is one of the biggest macro trends in the investment market. Pretty much every story that you're reading about today, either in the Journal or on CNBC, has a data angle to it, whether it's TikTok, whether it's Didi, whether it's T-Mobile being hacked, whether it's antitrust in Facebook and Google. These are all seeped in this notion of data privacy and compliance. The market is increasingly shifting towards one of consumer inclusion, and it's what's happening around the world is, companies are using data and privacy as a way to try to differentiate. For us, we believe that we are poised to actually benefit from this transition better than really any other company in the world. I often say to people, I would encourage anybody to look into the public or private market, find any company that is better positioned to take advantage of this market than us. We're cheap. We trade at $15 to $20 million market cap. We are not going to be there for long. But again, 320 million plus accounts, 15 kind of global platforms, no cost per acquisition in a $400 billion market that's being forced to transition due to regulation and technology changes. So that should give you a very good understanding of what the catalysts are. The long-term recurring contracts are growing in value and in number. And what I've often said to everybody is that we spun this company out of my last company, which we sold last year. And when we did that, we were Killi as a newborn in the middle of COVID. We made the educated decision to not focus on the sales team because no one was buying product at that time, and we focused on scale, distribution, and product with the intention of getting into Q4, seeing where the world was at, and beginning to build the revenue line. What we're doing now in the market is we're trying to take advantage of all the technology that we've already built, maximizing what we already have. So we don't need any more data. We don't need any more distribution in order to grow this revenue line considerably. So that's really where the focus of the business is. It's been growing sales leadership, salespeople on the team, and increasing the overall awareness. The revenue is trending higher every quarter. We're taking advantage of the scale that we've built. And as I mentioned before, there's over 45% ownership in this company. So this is a very tight float. As I've mentioned before, I'm kind of the main insider. So if you're investing in this company, you are definitely alongside me. Okay. So let's sort of quickly go to a couple of the questions. I know there's a couple. We've only got about 10 minutes to go here, so I'll burn through a couple of these. First question was, with all the issues in cybersecurity, are there any risk factors with democratizing data? I'd say quite the opposite, is that you have issues with cybersecurity because data is not democratized. So the way in which data is collected today has created security holes all over the world, with every single company having a different version of your data. It creates a honeypot for cyber activity. If you actually pinned individual data underneath the individual, creating a hub owned and controlled by the individual, there's no incentive for a cyber stalker to actually hack one profile. When you put 550 million profiles like Facebook had into one central spot, well, there's more value for a hacker to do that, which is exactly what they did in April. So the actual future, if you actually want to solve cybersecurity in the future, you need to redistribute the money. You need to redistribute the data back to the individual consumer, creating individual hubs controlled by them. So we actually think that that's something that is going to happen increasingly more in the future. But if people continue to store data in these sort of centralized hubs, they're asking for trouble, and they will inevitably get hacked. The second question that was asked by Shelly is it difficult or short-term, long-term for Killi to onboard when replacing an incumbent? Just maybe a little bit more kind of context around that is that people often ask me, who are the competitors of Killi? And I often say it is the incumbents. And so they are frenemies. So with most of these companies, they are exposed to the changes in data and they want to work with us. They want the Killi data sort of inside of their platforms. We're okay with that because they obviously pay us for that and we're able to pass that back to the individual consumers. It's difficult to onboard, it's difficult to sort of onboard into these individual platforms because they have to go through the validation of the data and then there's a technical integration. But each time you do it, it gets a little bit more efficient. For a client that actually wants to buy, data from us, that can be pretty much seamless. And I think that that's really a byproduct of, again, having the scale and having the scale of the data, but then having it in the platform that a client like Microsoft already uses. So simplistically, if our data is sitting inside Microsoft's preferred platform, as is the incumbent data provider, if Microsoft decides to use our data and it's in that platform, that's a seamless transition. And so we've tried to chop out any real friction in the sales cycle. So I think we've done a good job on that. The last question specifically, do you have a moat protecting Killi? I think so. I think the model itself kind of validates when you look in the market. I don't think anybody's doing what we're doing, and that's not, not to be cocky, but I think the way in which we're looking at the market is very different. We feel like we're the only company that's trying to build a consumer brand of data for consumers, and we think that that's a gap. The fact that there's a direct-to-consumer brand for ride-sharing and a direct-to-consumer brand for food delivery, but yet there's no direct-to-consumer brand for data, but yet every single consumer on the planet is a potential client, we think is a gap. So, who's the company out there that's trying to do that? Us. So I think that's a moat. And building a consumer-facing brand is not easy, especially when you need to connect it to a very difficult technical data ecosystem on the back end. So simplistically, we think we're B2C on the front end and B2B on the back end. I've been in the data market for over 20 years. You can't just kind of call up one of these global platforms and have them carry your data internationally. You need to know them. They need to know you. They've got to trust what you're doing. Every single time we build an integration, it creates a deeper moat for us. Every single time we bring another customer, another client into our ecosystem to buy data from us, it means they're not buying it from the incumbent. And every time we bring a consumer in here, it means that we're providing that consumer with access to their data for the first time, and no one's ever done that. So I think we have a huge moat now, and I think it just gets deeper, and we're trying to run away with the market. So what I just sort of say in closing is really the idea there that we think that these tailwinds of compliance and technical changes are really shaping the market. We think that we have more scale and distribution really than anybody else. We think that especially as kind of the market changes, like we really stand to benefit from that. So with that, I'll end it there and give everybody back 4 minutes of their lunch hour. Thanks so much for your time.
Ladies and gentlemen, that does conclude the Killi Ltd presentation. Thank you for joining us. You may now disconnect.